All right, what's going on, guys? Welcome back to another video. In today's video, we're going to be talking about how to trade iFVGs. I know I've made a lot of videos on daily profiles, bias, accumulation, manipulation, distribution. I've made a ton of videos, right? You can go and check them out. Again, we have multiple videos on the channel, so if you guys want to definitely check those out, you guys can. How to trade iFVGs, right? This is my model. Again, it has around like a 75 to 80% win rate. So yeah, let's just kind of get started. So, right, there's many different ways to trade iFVGs. There's a lot of people that use like 30-second iFVGs, 15-second iFVGs, and 1 minute, 5 minute, right? Essentially, it's all the same, but it comes down to context, right? So, how to trade iFVGs, right? You need to have a clear bias and apply context to that clear bias. So, what do I mean by a clear bias? You want price to have a clear one-sided direction in the market, right? There's many times where I've seen people take a long because we're bouncing off this PD array and they really don't know what to target. We're bouncing between two PD arrays and they're stuck within a range, right? When you're stuck in between a range, it's hard to really find a bias because you could be bullish here and a bullish could be setting up a bullish setup could set up here and your break even is not up until really higher, and then there's a SIBI here, so you're just kind of like stuck in this chop, right? And you get this is where you're gonna get bad price action. This is where setups are gonna fail, and price action is just gonna move sideways, right? So that is how to avoid those bad conditions, right? A lot of people are always so focused on, oh, the model is here, I could long, or the model is here, I should short, and they don't really know how to avoid the days when we're gonna have choppy price action. And those days are just as important as catching the good trades, right? So boom, we already have one condition set. If you're bouncing between two PD arrays, you're most likely not going to catch a good trade, right? Now, you need to have a clear bias. So boom, let's just say this fair value gap on the higher time frame invalidates. Now, what do you have? A clear one-sided direction, meaning we're most likely going to go here. Okay, and this, for example, we'll just mark it out as previous day high. So I'll just put here PDH. Okay, so right? Essentially, let's say we're bouncing off, this is a 4-hour fair value gap, this is a 1-hour gap, right? Essentially, you're gonna look to target previous day high. Now, this is where people get confused and they look at any small PD array, oh, 5-minute gap, immediately 1-minute inverse, I'm gonna go long. And then they see that price ends up going lower and then going right back to their drawn liquidity, right? And I'm going to show you guys how to avoid these things, right? So again, the first thing we want to do is apply context, right? Once you have a clear bias, you want to look at context. You want to look at, why does price need to bounce from this range? Why does price need to bounce from this gap? So therefore, once you apply context, you have to apply a condition, right? Once you have a condition set in place, now you just wait for price to meet your condition in order for you to take that long setup. So again, and that condition is going to be within a range. Okay, so let's kind of go on here and hop into a live example so you guys can see. And the first example we're going to be talking about is the daily profile. It's going to be one of the 3 setups you can look to take the iFVG with iFVG's execution, right? The strategy. So we're gonna hop into this week. I feel like one of the best setups that happened this week was on Wednesday. I ended up actually taking this trade live. Well, I ended up calling it out live. So if I were to go right over here, call this out. So Wednesday, good morning. Come into today with a bullish bias. We came down to equilibrium of the daily range. Plus, we finally mitigated the higher time frame order block, right? Create a bullish SMT with the 4-hour BISI during Asia. So I'm expecting Asia to be low of the day. Plus, we created a bullish breaker on the hourly. I know we're currently inside of a 4-hour SIBI, but in order to invalidate my bullish bias, we will have to invalidate my bullish 1-hour range. Until then, my targets of the day will be this intermediate term high and previous day New York session high. Keep in mind, we have news at 10 a.m. Stay safe. So let's take a look inside. What do we have? This range here. This is an intermediate term low. Again, an intermediate term low is a low inside of a fair value gap, right? To this high up here, right? We grab that range, price taps into a equilibrium right here, essentially. But it doesn't make sense yet. Why? Because we're not mitigating anything. Boom. Once we tap these down close candles, you're going to get this sweep and this retracement, like a close back in the range. Plus, what do we have? This daily open low. Again, if you guys have not watched my open low high close video or my open high low close video, I suggest you guys go and watch that. It's one of the best videos I have on this channel. I'm going to put it up on the screen so you guys can see. But yes, I suggest every single one of you guys go and watch that video. It's really, really good. So now that we have this daily open low, we have this sweep of the low, we should go essentially to this high, right? We mitigated this low. What am I going to look at? Now, what do we have? This 4-hour SMT, 4-hour bullish SMT right here. ES creates the lower low and Q creates the higher low, right? So now we are inside of this gap, right? This is where I told you guys, now we're bouncing between two gaps. I need to wait for this 4-hour to inverse, right? And this is where I go and show you guys a little bit of now context, right? Asia manipulated lower, put in low of day, and then we get that big expansion move higher, right? Now we're going to go into a new phase, right? Where again, we get accumulation, manipulation, distribution. After that comes what? Retracement, expansion, right? So what is my condition here? This is, again, I know we're looking at the 30-minute, but there was an hourly right here. If you look at this, this is the 1 hour. Right, and what did we do here? If you look at ES here, this is why context is so important, right? On NQ, we have this 1 hour gap, and what do? This is a bad invalidation of this gap. Essentially, it's not displacing, but right here, it's displacing, creating this 1 hour bullish breakup structure, right? Again, you have to look at context. Yes, I understand this is essentially a 4-hour, but when you go back on the higher time frame, we are bouncing off a daily. We swept this daily low. We came to equilibrium. We came and mitigated the order block. We have SMT with the 4-hour lows. Now we have a 1 hour bullish breakup structure. And then again, all these lows down here, all these highs down here is what? Low resistance liquidity. What do we have right here? This is all a low resistance liquidity, right? Low resistance liquidity. Where we form failure swings, there's no real protected high, right? Up until one. What makes this an intermediate term? What makes a high that it's highly probable that we could reverse from? An intermediate term high. It's a high inside of a value gap. And again, you'll see that if you grab this high to this low, this is a high inside of premium. A premium, we're inside of a range, and that high is in a premium of that dealing range. So this to me is low hanging fruit, and you can target this, right? Because essentially on the higher time frame, on the daily, we have an open low, so I'm expecting a high close. So what am I expecting to happen from here? Where is my drawn liquidity? I expect us to go to this high. Maybe not within this day, because this could be the reversal candle, right? This can be the accumulation, right? Manipulation. I expect this to be the distribution candle the next day, right? So essentially, I'm going to be targeting low hanging fruit. So essentially, that is my overall drawn liquidity, but I don't need to target that, right? I need to just have low hanging fruit. So when we go back on the charts, all I need is this, and then I could hold to this external high, right? So what am I looking for? I'm looking for this hourly gap to get mitigated and then trade higher, right? So now this is how I'm going to show you guys how to trade this, okay? Since we are bullish, what do I want to see? I want to see this hourly gap get tapped into, okay? After this hourly gap gets tapped into, why do I expect this to go higher, right? Well, from here, we're going to be mitigating this high, which is essentially London session high, right? This is going to be a breaker. This high here, this London session high. So we closed above London session high, so I'm bullish. I want price to tap back into the hourly for value gap, and we're going to go on a lower time frame and see, is there any low inside of this 1 hour gap that could potentially create a reversal after we sweep that low? So I'm going to come in here and look, okay, well, we have this 15-minute gap here, and I want to see this low, because now this 15-minute BISI is also aligned with the hourly BISI, and now I'm looking for a sweep of the low. So again, once that low gets swept, I can potentially look for some longs. Boom. Okay, so now let's take a look. Whoops. Let's take a look right here after that low gets swept. All right, boom. That low just got swept, right? What is happening at the 9:30 open? So 9:30 essentially opens up higher into what? This 15-minute gap. There's a 15-minute gap here. It opens into this 15-minute gap, right? Why? Okay, so before we go higher, we need to go lower. So essentially a lot of this 930 open higher was so price could deliver back down, right? So a lot of people could have shorted this as well to this hourly gap. Why? So essentially you can always break it down, but essentially I am bullish, but it just goes to show applying context is key, right? We inverse all these gaps. So essentially, where's the draw liquidity? This low. So 930 is opening higher into this, and then there's potentially like a 30-second short or 15-second short to this low, right? You can trade it that way. A lot of people trade that way, but I don't, right? Because I'm always applying context, right? So before we go higher, we need to go lower. So I'm expecting, 930 open higher, but that is just so price can go lower. The true manipulation is based off of the higher time frame. So this is how you don't get lost within the lower time frame. Once you have a drawn liquidity and you apply context, you set a condition. After you apply context, you wait for that condition to get met. You don't trade to your condition, because keep in mind, price doesn't have to go to your condition. That's the main thing from all of this. Price doesn't, if we're bullish, price doesn't have to retrace. Should it retrace for a nice entry? Yes, it should. Before we go higher, we should go lower. Before we go lower, we should go higher, right? But price doesn't have to do these things. Price could literally just keep rallying, right? That's why it is so important to wait for your conditions to get met. And that is how you avoid taking these silly losses, right? There's a few times where it makes sense, but you learn these things as you go and you get that screen time. In this occasion, this was pretty clear to me for some shorts, but it doesn't mean you have to. And I didn't even take it. Although it was clear to me, I didn't take it because I want my condition to get met first before taking a trade. So price comes to my condition, we sweep the low. Now what am I looking for? So I'm looking for an invalidation. Boom. If this gets invalidated, I know we'll go where? To this high at least. Why is this high prominent? Why is this a prominent high, right? You have to always ask yourself, this is going to be my break even. This is the 930 high. So 930 opens here. Boom, we get the 930 open. Let me mark this out for you guys. 930 open. We'll go on the right. Boom. So if we are bullish, anything below the opening price should be a buying opportunity. Okay, so what do we do here? 930, we're below 930 opening price. We go to my condition. So this is the hourly fair value gap. Again, we are bullish. Okay, remember, we are bullish. So price is sweeping this low inside of the hourly fair value gap, inside of what? This dealing range. Boom, right here. We came to discount of the entire range. So again, if I show you guys this real quick, boom, from this low to this high, we grab the dealing range, right? Now, did we come to discount? Yes. Did we tap into a higher time frame PD rate? Yes. Did we sweep a low? Yes. Now, what am I looking for? The highest time frame inversion of that dealing leg. So in this case, the highest time frame inversion is this 1 minute gap. I'm going to wait for that to get invalidated. Boom. That is my long. I'm going to put my stop at the low right here and look, break even here, and then target what? What was my targets again? What was my targets? The intermediate term high and previous day high, right? So, which is, let me take a look. Where is it? Right here. This high right here, and then this high. All I need is this high, right? So, how can I play this? This is where low-hanging fruit is so important. Where's low-hanging fruit? This internal. We know overall we are extremely more bullish. To where? Okay, we are way more bullish to my intermediate term high. Right, obviously we know this gets hit. That's why it's the example that we're going for and we're looking over, because it's a very good example to trade. And this is a trade that I actually ended up taking. Okay, so we know the overall drawn liquidity is here, but all we could target is here. This is low-hanging fruit. Yes, could we target this? Yes, 100%, right? But just to show you guys, you don't need the whole thing. You can always just target low-hanging fruit with this model, okay? So we grab, again, after all of our confluences, we have my range, we have equilibrium, higher time frame PD rate, sweep of the low, highest time frame inversion. Why don't I go break even here, right? Why am I not going break even here? A lot of people look at this wrong and say, oh, I'm gonna go break even here. You should not be going break even here. Why? Is this a prominent high? No, it's not. What is a prominent high? This high. It's a high inside of a higher time frame gap, right? If you go on the 2 minute, there's no gap here. This is the 930 high. Again, if you go on the 5 minute as well, something that has helped me a lot is a sweep of that same candle. So if you look at this here, we ended up sweeping this 930 low on the 5 minute time frame. So we should go essentially to that 5 minute high, right? And that is gonna be my break even because this high is inside of a higher time frame PDRA, right? And this low right now is inside of a higher time frame PDRA. So this is a low that should be a protected low. This is a high. After we've put in a protected low, this high is most likely not going to be protected because we are inside of discount, right? And we're on overall higher time frame bullish structure. So after we put in this protected low, this high is most likely not a protected high anymore, and we're going to go higher. So we get the invalidation. We have this 5 minute sweep of the low. We should go back to the 5 minute high. Let's see. Boom. Break even, TP1. So my break even is this high. We get big displacement through this high. And now what should I target? Intermediate term high. Let's take a look. Bam. Just like that. That is example number 1. And this is the example that I looked over, which is what? The daily profile. Right? Daily profile of the day was New York continuation. Since I expected a New York continuation, what does that mean? I need the New York session to give me that retracement to then continue higher, right? Sometimes New York continuation would just literally go into a 1 minute fair value gap and literally just keep shooting higher. And at times it's going to happen and you'll miss out on the move. And there'll be times where you do get the retracement, you do get the higher time frame imbalance, you do get the sweep, you do get the high time frame inversion, you get these beautiful A+ setups, right? Again, what makes this what makes this even better is we have equal highs, low resistance. And again, it's all fractal, right? See how we were looking over here, low resistance on the higher time frame? We were like, oh, those highs are so free. Why? Because it's all low resistance. Same thing on the lower time frame, all low resistance, right? It's fractal. Right? Whatever is going to happen on the higher time frame should also replicate on the lower time frame. Again, and see how on the higher time frame, remember we had this bullish SMT on the 4 hour? If you look at it on ES, we look at the same example on ES here. Where is it? Right here. Okay. If you look at the same example, look at the lows right here. See this low right here on ES, on NQ? So this low on NQ is this low on ES. Where do we have the SMT? Again, if you go right across, we create the SMT here. If you go right across, we create the SMT up here. See that? So there's a lower low on NQ. There is a higher low on ES. So now, what do you get? The SMT. Bullish SMT right here again. Lower low, higher low. So before we formed the reversal of the higher time frame, we got the SMT on ES and on NQ, and then we form the reversal. We got the SMT on the lower time frame on NQ and on ES, and then we get the reversal or the continuation, right? So you see that everything that's happening on the higher time frame happens on the lower time frame, right? So same thing with this 5 minute low. See the sweep of this 5 minute low to this 5 minute high? Well, let's go on the hourly. So let's go on the hourly here, on the hourly for value gap. So I'm going to remove these drawings real quick just so you guys can see this a little bit more clear. What do we sweep? This hourly low, we're going to go to the hourly high. And then, boom, we go higher. Right? You see how important it is to apply context? And look, it aligns perfectly. Right? We're still essentially sweeping this low right here, but look how clean that looks. Right? Now, all you're doing is just you're waiting for everything to align. Right? See how everything aligns here? Everything, you're tapping into the gap. You're sweeping this hourly low. We're going to go to the hourly high. We came to discount of the dealing range. It's near continuation. Again, we have, if you break it down from the very beginning, right? What do we have? The daily tapped into the daily order block. And what do we do? Tap into discount. What do we do? We had this 4 hour bullish SMT. And then what do? We displace higher. After that, the hourly, we get an hourly bullish break of structure because Asia put in Asia low. We then close above London highs. And then what do? Get the retracement, sweep of the low, SMT again, higher time frame PDRA, inversion high in the highest time frame, and we target the low resistance, right? So everything is aligning. Everything is aligning, right? Boom. That aligns right there. SMT, boom, displacement higher, break of structure of London session highs. What do I want? Retracement expansion. Now, same thing. What do we get on the lower time frame now? What do we get on the lower time frame? We go back. Okay, lower time frame, we get the retracement, we get the SMT, right? Lower time frame, we get the retracement to the higher time frame gap, we get the SMT, we have the 5-minute sweep of the low, we should target the 5-minute sweep of the high. That's going to be my break even because it's a high instead of a fair value gap. We get the highest time frame inversion. Boom, boom, boom. Everything is aligning. So this is one of those trades where I'm going to put way more risk on the table, right? Why did I go extremely risk on? Because we had news at 10 a.m. So this is one of those things where although everything is aligning, I'm taking the trade before news because I expect news to be that driving factor, right? Essentially, we hit the target before news and it is what it is, right? That's just something above my control. I cannot control that, right? If the market wants to keep pumping and delivering, it will do so. So that's example number 1. I showed you guys clear bias, right? We had displacement towards basically one direction, right? I show you how the displacement happened, the low resistance. I showed you a clear bias, right? So we're going to go here, clear bias, applying context, and I show you the range that we were trading in, the 1 hour range. In order for me to be bearish, in order for my bullish bias to not work anymore, we would have to invalidate my 1 hour bullish gap. It never got invalidated. We got the most beautiful reaction out of it, right? And what do we get? The beautiful setup, and we traded the daily profile New York continuation, right? Now, what is the second version you can target this? You're going to look at MEC, right? Which is a mechanical trade. Now, how can we trade MEC? Well, let's take another look at this. This occasion, the reason I did take this long was because, again, we had this hourly bullish break. This 15-minute bullish breaker right here. We broke structure of this high. We inverse this 15-minute right here. I know, right? On the hourly, but this makes sense in context wise, right? Because within this range, this is getting invalidating, right? What do we do here if you go on the lower time frame? We are respecting bullish PD raise. Bullish gap is getting respected, and then we displace higher. Now we have this range, right? We close above these highs here. What do we have here? A low, high, lower low, higher high. This is a breaker right here. What do we do? Respect this gap and then displace higher, closing above this high. So what do you think I'm going to look for? I may look for a long within this, right? But as you can see, this gets invalidated. But what do we revisit again? This range, right? So meaning we are most likely going to shift lower, right? But we are still inside of this range, so we can look to take a mechanical trade, right? So bullish PD rates are still holding. What did we come down to? You can look at price here. So essentially, I showed you guys how we're bullish, right? So now, when I'm looking at price here, right here, what did we create here? A 5-minute gap, right? Why don't I want to short this, right? Because we are still inside of another gap, right? Boom. So I don't want to short it to here, right? Again, if I get an opportunity to get like equal lows or something like this, we can, but not yet because we haven't shifted bearish yet. We're still very bullish. Like price is still respecting bullish PD raise, and this is the first bearish PD rate that we disrespect. I want to disrespect an entire range. So we're still bullish. So what am I going to look for here? Essentially, I would like to see this, but it didn't respect. So I'm going to look at this. I'm like, okay, last opportunity here. What do we get here? This 5-minute gap. This is a 5-minute. This is a mechanical trade, right? So if we sweep this low right here, boom, right? Now what do we have? We have a low to the high. What's the first thing we talked about? We talked about range. Again, a clear drawn liquidity, right? Where is this? Where is my... Okay, what do we talk about? Clear bias and applying context with range. So we have a clear bias to the 5-minute. We're clearly bullish. Again, we're applying context. Every 5-minute bullish gap is getting respected in a discount of that range, right? We already traded daily profile, and now we're looking to trade a mechanical trade where we're trading into a higher time frame fair value gap. In this occasion, the higher time frame fair value gap is the 5-minute gap, right? So applying context, we're clearly bullish, right? Clear draw liquidity. What is the draw right here? Essentially, the draw liquidity could be these highs up here, this high, and then this high up here, right? That is the draw liquidity for me, again, because we're clearly bullish, right? But all I need is this mechanical trade, it's low hanging fruit. So we are in a range, higher time frame PD rate. Once again, we sweep the low. This low right here should be the protected low, right? And now we should go and target the high, right? But now, if you look at even further, well, remember when I showed you guys everything needs to align? Look, what do we do here? We swept the 5-minute low. I want us to target the 5-minute high. So I'm going to go on the lower time frame again. You take a look here. 30-second inverse. Put my stop at the low. Put stop at the low. Break even. And then full TP is at the 5-minute. Again, I know you see the execution. I ended up closing a little bit like 98 right around here. The reason why I closed this, again, I know this is essentially negative R, but it's because we had SMT with my drawn liquidity. As soon as ES came in and SMT, so we had a bearish SMT right here, I didn't want to hold any longer because that's what my trade was. That's what my trade idea was. So I fully closed right there. An extra $100 won't change anything. And just to show you guys, this is how you trade a mechanical trade. Okay, very simple. Same thing here, mech trade. Okay. Once again, are we bullish or are we bearish? Right. Another mech trade here that I ended up taking the week like last week here. So we had this 4-hour Ferrari gap that we're bullish. We're sweeping these lows, immediately reverting higher, and now we are inside of this hourly range, right? This low to this high, again with this breaker. Okay. So when we have a break in a high time repeater, I don't really need to see equilibrium. Again, certain times that I will, certain times I don't need to. Again, since it was a continuation, again, we still get equilibrium here, but this is what I want to see. So what do? We get a high time from PDA, we tap into equilibrium. Again, so we have my drawn liquidity, essentially higher. Why? Because we displaced higher here, right? We inverse the 4-hour gap. We're clearly bullish to these highs. What do I need to see? A retracement back to continue higher. We swept this low. I'm going to look to target this high. Again, swept this low. I'm going to look to target this high. What do we have here? We ended up sweeping this low here. So there was a 30-second here. I ended up holding it and I ended up trailing it once we were around here. And I lost like around $200. Again, there was a 30-second here. I thought this was clean. We ended up losing again 10 a.m. If you look at 10 a.m. here, 10 a.m. we open and we go lower. So once we sweep this low, tap into EQ, we get a 30-second inversion. I'm like, yeah, I'm taking this long. Didn't work, right? What do we do here? Once again, sweep this low. We get this 1-minute inversion. So I looked to long below 10 a.m. So I waited for a tap back in. As soon as this closed, I waited for the next candle. We tap back in right there. I took a long. Break even was here. And then my TP were up here. This is how I approach this. Well, and I put my stop right here. So again, we have, look at it again. We have a clear drawn liquidity. We are applying context and we have my range, right? We have the range for continuation. So now what am I looking for? Again, higher time frame gap, right? So we have now a higher time frame gap. We're trading within the range. We came to equilibrium. We tap into this mitigation, right? So essentially we should bounce from here. And now we created the protected low. We got the highest time frame inversion right here, right? This is the highest time frame inversion. Boom. Highest time frame iFVG. There's no 2-minute, there's no 3-minute, there's nothing. The highest time frame is the 1-minute. So again, I'm not going break even here. Why? Because this is not a prominent high. Where am I going to go break even? Probably after the equal highs, maybe. But again, if the equal highs get hit, they're probably going to get hit at the same time with break even. Again, this is the first high inside of what? A gap right there, right? You see that gap? Boom. That is the first high inside of a gap. That makes sense to go break even. You go as a 2-minute, 3-minute, 3-minute intermediate mark. Now, there's not a 4-minute, but what is it? That is a 5-minute unfilled gap. Everything aligns now. That is a 5-minute unfilled gap. So I want to go break even if my drawn liquidity is where? 930. 930 open. Essentially, I want to see price trade up to 930 high. That is my drawn liquidity. So I could have just targeted this, right? Boom. That's my break even. Stop loss goes to break even, and I target, bam, full TP. So again, this is how you trade a mechanical trade. You have your drawn liquidity, but you're targeting now. Instead of targeting highs and lows, like intermediate term high on the hourly or London session high or London session low, you're targeting unfilled gaps, which is the 5-minute or the 15-minute unfilled gap. with that being said, I showed you guys now a few things. I showed you guys how to trade iFVGs. As you guys can see, like every single time we took a trade, there was only one higher time frame PD rate that was on our side, and we were either targeting an external high or low, or we were targeting unmitigated gap. But every single time we took a trade, there was nothing between me and my drawn liquidity. It was literally my drawn liquidity, my condition got met, and we bounced from my condition, and that's it. Right? There was nothing in between me and my drawn liquidity. Once the only thing that was between me and my drawn liquidity was my lower time frame invalidation, which is my iFVG. Once that got invalidated, and once that fair value gap got invalidated, I entered longs because everything on the higher time frame and lower time frame were aligned. So the first invalidation I saw, I took, traded to my drawn liquidity. Yeah, so with that being said, I hope you guys enjoyed this video. Again, not financial advice, just my own perspective. And with that being said, if you guys have any comments, questions, concerns, leave it in the comment section below. I'll be really happy to answer those questions and be able to help you guys out if you have any questions or if you're confused with anything. So yeah, other than that, I'll catch you guys in the next video. Peace.